Welcome back to Investing Talk Podcast. We are diving into the world of streaming services today.
Oh, yeah.
A company that's been making some headlines.
Yeah.
Fubotv.
That's right. They've been grabbing a lot of attention lately, especially with that stock performance.
Their stock ticker symbol FUBO has surged over 130% recently.
It has.
So that begs the question, is Fubotv a stock worth holding?
Right.
Or is it time to fold?
That's the question, isn't it?
For all of us.
To answer that, I think we need to understand what's driving this sudden surge and whether it's sustainable for the long run.
Let's unpack what Fubotv actually is.
Okay.
Essentially a sports-focused streaming service.
Trying to carve out.
It's trying to carve out its space in the market.
Yeah, dominated by giants.
Dominated by giants like Netflix and Disney.
A little bit of a David and Goliath situation going on, but they've been making some pretty interesting moves.
They have.
As of today, January 6th, 2025, their stock is trading at around $3.24.
Okay.
Which reflects a pretty volatile day, swinging between $3.05 and $3.98.
So a big swing.
Yeah, it's worth noting that this surge comes after a prolonged downtrend, so we could be looking at a potential recovery phase.
That's really interesting. A recovery phase could mean a great buying opportunity for investors, right?
Yeah, it could.
But how do we know if this is a real recovery or just a temporary blip?
I think that's where we need to look beyond just the stock price and delve into both the technical indicators and the fundamentals of the company.
Okay, so let's start with the technical indicators.
Right.
Those can give us some clues about the stock's momentum.
Yeah.
Now, our sources mentioned a bunch of these indicators, moving averages, RSI, stochastic oscillator, MCD, ADX.
Yeah.
It's a bit overwhelming.
Can be a lot to take in. Let's break it down in a way that makes sense.
Okay.
So the moving averages, which track the stock's price trends over different periods, are mostly pointing down.
Okay.
That's usually a bearish signal suggesting that the price might continue to decline.
So the moving averages are saying sell, but what about the RSI?
Right. The RSI, or the Relative Strength Index, is a momentum indicator.
Okay.
That tells us if a stock is overbought or oversold.
Okay.
In Fubotv's case, the RSI is approaching oversold territory.
Okay.
This means that the stock might be undervalued and could be poised for a rebound.
So we have a sell signal from the moving averages and a potential buy signal from the RSI.
Yeah.
What about the other indicators? Are they giving us any clearer direction?
Not really. The stochastic oscillator, which looks at the stock's recent price range, is giving mixed signals.
Okay.
The MCD, which measures momentum, is currently negative, also suggesting bearish momentum.
Got it.
And the ADX, which measures the strength of the trend, is indicating a moderate trend, but not strong enough to confirm a clear direction either way.
So we have kind of a mixed bag of technical indicators. Some are
Yeah.
saying sell, some are hinting at a buy, and others are just sitting on the fence. What's the takeaway for our listeners?
Cautious optimism. I
Yeah.
think the recent price surge is encouraging, and the RSI suggests there might be some upside potential.
Right.
But the other technical indicators are hesitant to confirm a full-blown trend reversal.
So we shouldn't get too carried away by this recent price jump.
Yeah.
There's still a lot of uncertainty surrounding Fubotv stock.
Sure.
But before we get into that, let's switch gears and take a look at the company's fundamentals.
Okay.
After all, the stock price is only one part of the story, right?
Right.
What's Fubotv actually doing to grow its business and attract investors?
Good question. I think we need to look beyond the hype
Yeah.
and assess whether the company has a solid foundation for long-term growth.
Right.
And to do that, let's dive into their recent earnings report and see what it reveals about their performance and strategy.
From what I've read, Fubotv's Q3 2024 earnings report showed some promising signs of growth.
It did.
They reported a 21% year-over-year increase in revenue, reaching $377 million.
That's not bad.
That's not too shabby.
No, it's pretty impressive.
It's impressive growth, and it shows that their business model is gaining traction.
Right. They also reported a 9% increase in paid subscribers, reaching 1.613 million.
So more and more people are subscribing to the service, which is a good sign for the future.
Yeah, so more subscribers, more revenue. It sounds like Fubo is doing something, right?
Yeah, they are.
Are they just relying on organic growth, or are they making strategic moves to attract new audiences and solidify their position in the market?
I don't think they're resting on their laurels.
Okay.
They've been making some savvy moves to expand their reach and appeal to a wider range of viewers.
Okay.
One example is their recent launch of Hallmark Plus.
Hallmark.
Yeah,
Right.
a standalone subscription service featuring Hallmark Christmas movies and original content.
I wouldn't have thought that would be a major growth driver.
Well, it might seem niche, but think about it. Hallmark has a dedicated audience, especially during the holiday season.
True.
People love those feel-good movies. And by offering Hallmark Plus, Fubotv is tapping into a whole new segment of subscribers.
That's actually a really smart move.
It's all about finding those niche markets and offering something unique that other streaming services don't have.
Absolutely.
Speaking of unique offerings, Fubotv has also been expanding their fast channel offerings.
They have, that's right.
Tell me about that.
They recently partnered with NBC Universal to launch a suite of fast channels, starting with Telemundo.
Okay.
FAST channels, or free ad-supported streaming television channels, are becoming incredibly popular with viewers
Yeah,
who want more options without paying more.
makes sense.
This is a strategic move by Fubotv to attract a broader audience and increase their viewership.
So they're attracting new subscribers with targeted content, growing their revenue and expanding their reach. That's got to be music to investors' ears, right?
In the long run, it could be, but there's a catch.
What's that?
Despite all this growth, Fubotv is still struggling to become profitable.
Ah, yes, the dreaded P word.
Yeah,
They're making money, but they're spending even more.
exactly.
That's a concern for any investor.
Absolutely. Analysts predict that this profitability struggle will continue for a while.
Okay.
As Fubotv focuses on expanding its subscriber base and adding more features to its platform.
It makes sense that they're prioritizing growth over profitability right now.
Right.
They need to build a solid foundation before they can reap the rewards. But the question is, how long can they keep burning cash while they're duking it out with the streaming giants?
That's the million-dollar question.
Yeah.
It's something investors need to weigh carefully because while growth is exciting,
Yeah.
profitability is ultimately what determines a company's long-term success.
Right. And it's not all sunshine and roses, is it? They recently lost some popular programming from Televisa Univision.
They did.
How big of a blow is that?
It's definitely a setback, especially for their Hispanic viewership.
Okay.
Fubotv decided to walk away from Televisa Univision's demands for a price hike and bundling,
Okay.
which shows that they're serious about controlling costs.
Right.
But losing popular content is never a good look.
No.
And it could lead to some subscriber churn.
It's a tough call.
No.
You don't want to overspend, but you also don't want to alienate a significant portion of your audience.
Right.
Speaking of tough calls, get ready for this. Reports are swirling that Disney might merge its Hulu Plus live TV business into Fubotv.
Whoa.
Can you believe that?
That's a bombshell.
This is huge. A potential merger with Hulu. Let's unpack that after a quick break.
Sounds good. We'll be back in a moment to break down the potential implications of this merger and what it could mean for Fubotv's future.
See you soon.
All right.
All right, we're back, and I am still trying to wrap my head around this potential merger between Fubotv and Hulu Plus live TV.
I know, right?
It's a huge development,
Huge.
and it's hard to know what to make of it.
Yeah, it's definitely a lot to process. The potential merger could really reshape the streaming landscape as we know it.
For sure.
Raises a lot of questions for Fubotv, its investors, and the industry as a whole.
Okay, so let's try to untangle this a bit. What exactly would this merger look like?
Okay.
What would it mean for Fubotv in practical terms?
From what we're seeing in the reports, Disney is exploring the possibility of absorbing Hulu Plus Live TV into Fubotv,
Okay.
essentially creating this new combined entity.
So not a complete takeover,
Right.
but more of a merging of forces.
Yeah, that's a good way to put it. The key detail here is that Disney would become the primary owner of this new venture.
Ah, so that's where those concerns about Fubotv's independence come in.
Exactly. On the one hand, Fubotv would gain access to Disney's vast resources
Right.
and Hulu's content library.
Huge plus.
Huge plus. But on the other hand, they'd be operating under Disney's umbrella,
Right.
which could limit their autonomy and potentially stifle their own vision.
So it's a classic trade-off between independence and scale.
Yeah.
More resources, more reach, but potentially less control over their own destiny.
It's a complex equation and one that Fubotv's leadership will need to weigh very carefully.
Let's play devil's advocate for a moment.
Yep.
What are some of the potential benefits of this merger for Fubotv and its investors?
Well, the most obvious benefit is the content boost. Hulu has a massive library of popular shows, movies, and originals.
It does.
Adding that to Fubotv's sports-centric offerings would create a very attractive package for subscribers.
It would definitely make them a much more well-rounded competitor.
Yeah.
able to appeal to a wider range of viewers, not just sports fans.
Precisely. And then there's the financial muscle of Disney.
Oh, yeah?
Fubotv would have access to significantly more resources,
Okay.
which could help them accelerate their growth plans and potentially even reach profitability sooner.
So they could invest more in content technology marketing.
Right.
All those things that are crucial for success in these streaming wars.
Right. And having Disney's backing would also give them more leverage in negotiations with content providers and distributors.
It's like having a powerful ally in your corner.
Exactly.
Someone who can help you navigate the complexities of the streaming landscape.
For sure. But as with any major business decision, there are also potential downsides to consider.
Okay, so let's flip the coin.
Huh.
What are some of the risks or downsides of this merger for Fubotv?
Well, the biggest concern, as we've mentioned, is the loss of independence.
Right.
Fubotv has built its brand around being a sports-first streaming service with a unique personality.
Yeah.
Would that identity be diluted or even erased under Disney's control?
It's a valid concern.
Yeah.
There's always a risk that a smaller company gets absorbed into a larger one
Right.
and loses its distinct voice and vision.
And there's also the question of how this merger would impact Fubotv's existing partnerships.
Right.
What would happen to their deals with NBC Universal or other content providers?
That's a good question.
Would there be conflicts of interest?
It's a logistical puzzle that would need to be carefully sorted out.
Yeah.
And there's no guarantee that all of Fubotv's current partners would be happy with the new arrangement.
Right. Some might see Disney as a competitor and choose to walk away.
For sure. And it's also worth considering the cultural differences between Fubotv and Disney.
Uh-huh.
Fubotv is a relatively young and nimble company,
Yeah.
while Disney is a massive entertainment conglomerate with a long history.
Right.
And a very specific way of doing things.
Those cultural differences could definitely lead to clashes and friction, which could ultimately hinder the success of the merger.
So we've explored the potential upsides and downsides of this hypothetical merger.
We have.
But where does that leave us in terms of Fubotv's overall prospects?
Right.
Is this a company worth investing in, or are the risks just too high right now?
That's a great question, and unfortunately, there's no easy answer.
Right.
Fubotv is a company with a lot of potential, but also a lot of uncertainty.
They're operating in a highly competitive and rapidly evolving industry.
They are.
And this potential merger with Hulu just adds another layer of complexity.
Yeah, it's like trying to predict the weather. You can look at all the data and make an educated guess, but there's always the chance of a sudden storm that throws everything off course.
So what should investors do? What are the key things to watch for as this story unfolds?
The most important thing is to stay informed and do your research.
Okay.
Don't rely on headlines or rumors. Dig into Fubotv's financials, their strategy, their competitive landscape, and form your own opinion.
And don't be afraid to ask questions.
Right.
What are the key factors that will determine Fubotv's success or failure? What are the potential upside and downside scenarios of this merger? How does Fubotv plan to address its profitability challenges?
It's all about weighing the risks and rewards and deciding if Fubotv aligns with your investment goals and your risk tolerance.
And remember, this is an ongoing story. The situation with Fubotv and Hulu is still developing.
Right.
So stay tuned for updates and be prepared to adapt your investment strategy as needed.
The world of investing is dynamic and unpredictable, but that's also what makes it so exciting.
It is.
There are always new opportunities and challenges emerging, and it's up to each investor to navigate those waters wisely.
Okay, so we've covered a lot of ground today.
Yeah.
We've explored Fubotv's recent stock surge, the mixed signals from the technical indicators, their strategic moves, their financial performance, and of course the potential game-changing merger with Hulu plus live TV.
Right.
But there's one more piece of the puzzle that we need to examine before we wrap up.
Okay, what's that?
The competitive landscape Fubotv isn't operating in a vacuum. They're facing intense competition from some of the biggest players in the entertainment industry. So let's dive into that after a quick break.
Sounds good. We'll be back in a moment to analyze Fubotv's rivals and assess how they stack up against the competition.
All right, we're back and ready to tackle the final piece of the Fubotv puzzle competition.
Yeah, competition, we've talked about their growth, their challenges, and this potential Hulu merger. But, understanding their competitive landscape is crucial, I think, for assessing their long-term viability.
Yeah, it's a jungle out there in the streaming world.
Yeah.
So who are Fubotv's main rivals? And what are their strengths and weaknesses?
Well, they're facing off against some heavy hitters,
Yeah.
including Netflix, Disney, and Amazon Prime Video.
Those are some seriously big names. How can FuboTV possibly compete with giants like that?
Well, it is a David versus Goliath situation for sure, but Fubo TV has carved out a niche for themselves by focusing on live sports.
So their strategy is to be the go-to streaming service for sports fans.
Exactly. They're betting that their sports-centric content will be enough to attract and retain a loyal subscriber base.
That's a smart move considering the passionate following that sports have, but even within that niche, they're not alone, right?
Oh, you're absolutely right. They face competition from dedicated sports streaming services like ESPN Plus and DZN.
Okay, so it's not just about being different, it's about being better. How does FuboTV stack up against its rivals in terms of content pricing and features?
Well, they offer a wide range of sports channels, including NFL, NBA, MLB, NHL, and international soccer. They also have news channels, entertainment channels, and even Hallmark movies.
So they're trying to appeal to a broader audience while still keeping their core focus on sports.
Exactly. They're aiming to be a one-stop shop for all your entertainment needs, not just sports.
What about pricing? How do their subscription fees compare to the competition?
Their pricing is competitive, but it's on the higher end of the spectrum. Their basic plan starts at around $75 per month, which is more expensive than some other streaming services.
Yeah, that's a significant cost for consumers to bear, especially with so many other streaming options available. So what are they offering to justify that higher price tag?
Well, they offer a lot of channels, a good user interface, and features like 4K streaming and multiple device support. They also have the FUBO Sportsbook, which allows you to place bets on live sporting events directly through their platform.
Oh, that's interesting.
Yeah.
That's an interesting differentiator,
Mhm.
but it also raises some questions about regulation and the potential risks associated with gambling.
You're right. It's a bold move, but one that carries some inherent risks.
So FuboTV is facing fierce competition from both general entertainment streaming giants and dedicated sports platforms.
Yeah.
They're trying to stand out with their sports focus, their diverse content offerings, and innovative features. But their higher pricing could be a barrier for some consumers.
It's a tough battle, and only time will tell if their strategy will be successful. But they're definitely a company to watch, especially with this potential Hulu merger looming on the horizon.
All right, so we've covered a lot of ground today. FuboTV's recent stock surge, the mixed signals from the technical indicators, their strategic moves, their financial performance,
Right.
the potential merger with Hulu, and the competitive landscape.
Yeah.
What does it all mean for our listeners who are considering investing in FuboTV?
I think the key takeaway here is that Fubo TV is a company at a crossroads.
Okay.
They have a lot of potential,
Yeah.
but also a lot of challenges. Their future really hinges on their ability to execute their growth strategy, navigate this competitive landscape, and potentially even integrate with Hulu if that merger comes to fruition.
It's a high-risk, high-reward situation.
Yeah.
Investors need to carefully weigh the potential upsides against the potential downsides and decide if FuboTV aligns with their investment goals and risk tolerance.
And remember, there's no crystal ball here.
Right.
We can't predict the future with certainty, but by understanding the company, the industry, and the competitive landscape, you can make more informed investment decisions.
That's great advice. We've given you a lot to think about today, but remember, this is just the starting point. We encourage you to do your own research, explore the source materials, and form your own conclusions about FuboTV's future.
Yeah. Knowledge is power, especially in the world of investing.
Absolutely. We've reached the end of our look into FuboTV. We hope you found this episode informative and thought-provoking.
Yeah, thanks for listening.
As always, we appreciate you joining us on Investing Talk Podcast. Don't forget to subscribe to our podcast, share this episode with your fellow investors, and leave a comment with your thoughts. We love hearing from you.
We do.
Until next time, happy investing.